Today, I want to talk about another aspect of the One Big Beautiful Bill Act that passed July 4th, 2025, and its impact on charitable donations. Believe it or not, it has quite an interesting impact that I think is relevant to those that are in retirement and to a lot of people actually in US because for the most part, people do donate to charity and lately they haven't been able to write it off, but now they will be. Speaking of charity, my charitable donation to the world is taking care of Tony Shore and bringing him on the show.
Somebody has
You
to.
know,
Somebody
someone
has
has
to.
to.
Somebody
You know,
has to give me something to do and take care of me, and I appreciate it, Dan.
and the checks from your mom and dad do still help. You know,
Oh,
so
good Lord.
Mom, that's from my
so
Roth IRA.
Tony, the One Big Beautiful Bill Act.
Yeah. The
OBBA.
OBBA.
Didn't they make
The
a song about that?
OBBBA.
OBB, you know me. So there's a piece in there that we haven't really talked about yet. We've done a couple of shows on this, and it has to do with taxes, but it also has to do with charitable donations. So let me
Right.
talk about what it does. So starting next year, 2026, individuals may deduct up to $1,000, and married couples filing jointly can deduct $2,000 of charitable donations without itemizing. So we can use the standard deduction and still get an additional 1,000 per person off of a charitable donation. Because what happens now, people have to donate, they have to use itemization so that they can get the deduction. But now, according to the new act, they can get up to $2,000, which
So
is
it's better,
I
which is
think
better
big.
than nothing, right? I mean, before it was nothing, right? You
Well,
either
you'd have to itemize.
itemized or you took the standard deduction. But if you took
Right.
the standard deduction, you couldn't itemize anything, right?
Right. And so the people that are, well, we'll get into it. So this is above the line. So what that means is if if you donate $2,000 as a married couple, it just comes right off the top. It's almost like a IRA contribution. You don't pay tax on it at all. Just your taxable income goes down by that dollar amount. And so your adjusted gross income goes down, which is useful also considering that if you're not yet on Medicare, this can help you stay below the Affordable Care Act subsidy amount. So I think it's pretty good. You know, traditional charitable donations you have to itemize, which isn't a big deal for the people that are donating hundreds of thousands, right? Because they're going to itemize. The standard deduction doesn't mean much to them. But for the lower income people, middle class and lower, this is a big deal.
Yeah.
I feel. Because it's going to, when I don't have the studies in front of me, I should have looked them up in advance. But I saw that when the itemization was required, where they stopped eliminating, when people went to the standard deduction, charitable donations at the small end went down.
Of course. And
I think they're going to go back up because, like, think about, I do a lot of work locally with local charities. The little $20, $100, $500 donations, you don't get anything for it unless you itemize. But I think I think charities can start promoting this and saying, hey, give us $50. We'll give you a receipt so you can write it off on your taxes.
Yeah.
And those little grassroots donations will add up, in my opinion. Don't know. We'll see. But this doesn't take effect till next year. So let's give an example, Tony. Let's say someone single and they're in the 22% tax bracket. They donate $1,000. That's $220 off their taxes. So the true cost of the donation to the person donating is really $780 because they're going to get $220 off their taxes.
Huh.
Quite a deal.
Yeah, that's huge. I mean, that's a great deal. And you're right. When they went from, there's good news and bad news with the standard deduction. I've told you this before. It's the standard deduction and the elimination of really all that nickel and dime itemizing was my favorite part of the Tax Cuts and Jobs Act. And it's also, it's been extended and improved in the new One Big Beautiful Bill Act. But there's negatives too. Like, okay, some people have argued, hey, itemizing, I think I'd do better, or I want to be able to donate and itemize, or like you said, a lot of these donations, some of them went away because people were no longer itemizing, so they donated less, right? And so I think
Right.
it's good that they added this back to kind of help out with that. It's a huge positive. I think it should be even more. I mean, what about people who donated a lot, like somebody who would give more, like what about those who tithe 10% of their income to the church each year? If you don't itemize,
Right.
you can't deduct that, right?
Right. Right. You could deduct 2,000 as a
Yeah.
married couple.
Yeah.
Now, next
Yes.
year, I should say next
Yeah.
year.
Next
Yeah,
year.
you're right. Now those people probably didn't stop tithing because
Right.
they couldn't write it off, right?
Right. Right. And
But I
hopefully
I
most people
think
didn't stop giving, but some might have.
right. And I think this should encourage more small donations because
Yeah.
people, I mean, if you think about it, if you're in a lower tax bracket, 12%, that's still a 12% off your taxes
Yeah.
that for every $100, that's $12 that you don't have to pay tax on. That's pretty good.
Yeah.
And that's not going to deter the large donors because they're itemizing anyway. So
Yeah.
I think
True.
it's a net
True.
positive. And if you think about it, Tony, we just did a show on how seniors are going to get anyone 65 and up is going to get a $6,000 bonus deduction.
Per
So
person.
that's 12,000 for a married couple. Add another 2,000. That's 14,000 if you donate to charity, and which most people do. They give
Yeah.
something, even
Yeah.
if it's to the local library, a church, or whatever they're giving it. Might as well allow them to write it off.
Yeah.
So I think it's
Huge.
going to be a positive. I think it's big. I don't think people realize this is part of the one big beautiful bill because they hear about all the other big things, the bonus deduction or the tax brackets. But this is a nice little bonus, in my opinion, to help out the local charities and to help out the local lower to middle income people because that just went away and you didn't get to write it off anymore. But now you do. But just make sure you get a receipt because you could donate to the church and not get a receipt for your donations over the year. And then if you do get an audit and you say, "Oh, I donated 2,000," and you get an audit, they're gonna say, "Prove it," and you can't go back and say, "Well, let me try and drum that up." They're gonna want to see that receipt. So get the receipt from a qualified charity.
Makes
The
sense.
other thing, the other thing is I don't want to forget about QCDs, qualified charitable donations, distributions. I mean, so this is where you take an IRA distribution and you give it directly to a charity that you write off, and
Yeah.
there's
No
not
check,
there's
no checks cut. It goes right from your IRA account into the account of the charity. And
right.
that's called a qualified charitable distribution that goes direct.
Right. And that's only for people 70 and a half and older.
Yep.
So, if you're not yet 70 and a half, you can't do a qualified charitable distribution. But there's a lot higher limits on what you can contribute through an IRA. And that's also you write it off. So you don't pay tax on that.
Yeah.
Even though it's a distribution from an IRA, you don't pay tax on it. But it also counts toward your required minimum distribution. So you don't have, you could kill two birds with one stone. I have to take out 5,000 from my IRA this year. I don't want it. I'd rather give 5,000 to charity. You could take it from the IRA, give it directly to the charity, write it off, not pay taxes, and counts toward your required minimum distribution. The IRS is happy, charity's happy, you're happy.
And
So
it
that's
doesn't
not
raise
gone
your
away.
taxable income or your
Correct.
adjusted gross income to put you in a higher tax bracket, or affect how much you pay for other
Right.
things. Yeah.
And that's going to be particularly useful to people with a large RMD amount. Now, they
Yeah.
may itemize anyway, but they can do a qualified charitable distribution if the $2,000 max on this distribution and that we were just talking about isn't enough. You can always do a QCD. But
Mhm.
again, you have to be 70 and a half. So,
Sure.
yeah. So I think it's going to be a good thing, Tony, overall. I think it's going to increase charitable distributions and donations in 2026. So this will be the last year before that's implemented. Also, it's not a temporary thing. So the only way that's going to get pulled is if they change the law. So that's kind of nice. unlike the $6,000 bonus, it's only 3 years. This is permanent. And so I think the lower to lower class income will really have the most benefit because they're going to give the charity anyway. At least now they'll be able to write it off.
Yeah.
Now it may not be a huge write-off, 12%, maybe 22, but it's better than nothing, right?
Yeah.
Better than nothing.
Oh, for sure.
Because I think it's like 90% of people take the standard deduction.
Yeah,
So
it's high. It's a high number. We don't have the exact number or a source, but I do know that I've read that too. It's a really high percentage of people who now take the standard deduction. I mean, almost everyone I know personally does it. And so, and I've talked about it with a lot of folks, and you meet with a lot of people. Yeah, I would say that's probably pretty accurate. I mean, so many people utilize the standard deduction, and there's things in the big, beautiful bill, like you mentioned, for those over 65, they're getting a lot of bonuses for their standard deduction.
right.
Yeah.
And so
huge.
it might allow Roth conversions to take effect more because you have more
Yeah.
wiggle room, even if it's a small amount. But again, I think we should see an uptick. So I would be talking to your financial planner, your accountant, start tax planning, figuring out, oh, maybe we'll hold off this year on that charitable distribution and just give it to them in January because then we can write it off in January. So if you do like a charitable like a charitable donation in Christmas time, you
Yeah.
might say, let's give it to them in January because I'll get the tax write-off.
Yeah.
And you still, it's not huge in terms of the dollar amount per person, but overall, I think it's going to be big for the charities in general, which leads me to my next point, Tony. I think you said before the show, when I mentioned this, you're thinking about now opening a charity so that
Well, I
you
was
can
thinking about
extend.
how I could get it's a good place if you give me the $2,000. But I'm not I would have to be like a 501(c)(3) for that to qualify.
It's got to be qualified. Yeah. Yeah.
Yeah,
So,
you can't just say you did it. You have to have some kind of proof.
yeah, I think so, Tony.
Yeah,
You know,
because I
yeah.
think you've always said that I'm like a charity, that you
You
have to
are,
keep
though. I'm
giving
not going
to.
to take that back. I think you are.
Right.
You know, you're
Tell the
like the Jelly of the
government
Month
that.
Club.
Make it official.
You're like a combo of a charity and the Jelly of the Month Club. I don't
It's the
mind giving it
gift that
the
keeps
money,
on giving.
and it just keeps giving. Gift that
It's the
keeps on
gift. It's the gift that keeps on giving the whole year round, Clark.
giving.
Yeah.
On that note, Tony, I'm going to end it there. Thanks for another good show, and we'll catch everyone next week.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.